Hello, everyone. I'm Joe Welu. Thanks so much for tuning in to Expert Insights, where we talk with industry leaders across modern financial services to discuss leadership and innovation. Let's get started. Hello, everyone. Joe Welu here with another episode of Expert Insights. I'm extremely thrilled today to announce our guest from Encore Bank, Mr. Allan Rayson. Welcome to the show, Allan. Good to be with you, buddy.
Thank you very much. Appreciate you having me.
A little bit about you, incredible background. So I'm just going to read a few notes here and feel free to add anything that we've missed. But Allan is an accomplished banker and leader with a 20-year track record as a commercial banker and market executive in the commercial banking and specialty finance space. He's also former CEO and co-founder of Paid Up, a financial technology company designed to support youth sports clubs. Allan and his co-founders launched the startup in Austin, Texas, where they supported youth sports clubs across the domestic U.S. Applying what he has learned in fintech and banking, Allan is now Chief Innovation Officer and Chief Technology Officer at Encore Bank. And I've heard a little bit about the growth story, incredible growth story. So amazing background. And from what I understand and what I've read, you were named 2022 Digital Banker of the Year by American Banker, if I have that right.
That is correct. It has been it's been a great year. Been a lot of fun. That was all announced in June of this year.
Yeah, well, first of all, congratulations, and I know they're very thoughtful about who they give those awards out to. So that's an incredible honor by American Banker. What's super fascinating about you and the story that you have is you really built Encore Bank's tech stack from the ground up. And maybe just to give the audience a little bit of context, maybe just a little bit about Encore Bank, and then I think we'd love to just have you maybe walk through the journey, because you started with sort of a blank canvas from what I understand. So we'd love to hear that as well.
Yeah, no doubt. It's been the bank is only about 3 years old, so it's been quite a journey over a relatively short period of time. I joined Encore in October of 2020, so I've been here since pretty much the beginning, and we have been on quite a journey. Be happy to give you a little bit of the backstory if that would be interesting.
Yeah, that'd be great. So you guys started from a standing start, right? Like literally 3 years ago, like from zero. Okay, yeah. So what did that look like? And then kind of maybe just for context, kind of how far have you guys come in a very short amount of time? Because if you would have told me, if I didn't know your story to be true, I would have said that's super unreasonable to think that you guys would be able to get that far in that amount of time.
Yeah. Well, it has been a track meet for sure. We've been moving pretty quickly from the beginning. But yeah, we have three co-founders that acquired a charter back in 2019, and at that point, obviously very small bank, about 130 million in assets. We're about 3 billion today, roughly 36 months later. But when Chris and Philip and Bert, our three co-founders, acquired the charter, they knew what their game plan was. Ultimately, there weren't a lot of assets, and the game plan was high growth. Sort of expansion across the broader part of the southeastern part of the United States. So they knew what the game plan was, when the charter was acquired. But it has been from a technology perspective, from a growth perspective, it's been a real blessing in all honesty to come into a situation where you do have pretty much a complete blank slate. Really, the only major piece of technology that was in our tech stack was our core, our partnership with our core technology provider, firm out of Little Rock called Smiley Technologies. So beyond that, we were running the bank off of spreadsheets and Microsoft products for a while.
So walk back a little bit. So 130 million to 3 billion is a lot of growth. And knowing your background, obviously the technology was a huge factor in
Yeah.
enabling that kind of growth. Maybe start out like, what were the first couple of things that you guys focused on, and
Mhm.
anything that you want to point out that was really impactful as far as setting that growth up, and would love to hear some detail on that.
Yeah, I think it's a great question. I mean, looking back, there's a couple things, several things that we've learned, but from a technology perspective, maybe try to find some things that might be helpful for those listening. I think one of the big things that we learned is you have to have the operational technology side of the house, um, you know, pretty well set before anything on the innovation side of the house is going to happen. So, we really were in a position where we needed to and had to prioritize the operational side first, knowing what we wanted to do on the innovation side. But for us, we're a commercial bank, right? So that of roughly $3 billion in assets, the vast majority of that is commercial. Us
Hmm.
us using our balance sheet on behalf of our clients to put capital into commercial real estate and C&I, operating company finance type stuff. So when you think about how you're gonna move your loans through the pipeline, how you're going to manage your portfolio, how you're going to manage risk, all of those things had to be kind of built from scratch using technology to build out the operational side of the house first before we ever really started thinking about innovation.
So the building blocks were sort of the first key
It's a
things
great way to put it. Yeah.
you focused on. Is and if you maybe just describe sort of, you had the core, a partner in the core. What were, from an operational standpoint, what were a couple of those key building blocks that you
Yeah.
felt were critical to then set up the next stage of being able to do some of the more innovative things that we'll
Sure.
get to?
Yeah, I mean, I think for us, and maybe hopefully for everybody running a business, I mean, we figured out and prioritized our the key pieces of our business first. We knew, I don't know how much you know about our capital raise model, and I'm happy to talk about that. But
Yeah, I'd love to hear.
our capital raise model um, really skews us commercial versus consumer. And what I mean by that is we go out, we put about 100 investor partners around us in every market. So today we're in about 20 markets across the Southeast. So Tampa, Charlotte, Nashville, Dallas, Austin, Denver. I mean, really key metropolitan markets across the Southeast. And in each of those markets, we have about 100 investor partners, people that have
And
literally written their own checks into our common equity.
And so, question that may seem like a dumb question, but are a lot of those capital partners, those investors, also business owners that
You got it.
you have as clients, right?
Yep, that's right. So
Awesome.
I would say two personas are important to us with respect to our investor partners. That for the most part, we're kind of handpicked, to be honest, because
Hmm.
the two personas that we were really looking for from a strategic perspective were, one, business owners,
Hmm.
owners of an underlying small or mid-sized business, and or highly connected people in a market. Because ultimately, fast forward to today, we've put about 2,000 investor partners around us that across the footprint, and so that's our business development function, for the most part.
Which is fascinating, and from my perspective, it feels like it's unique. I don't know how unique it is or isn't, but it feels like it's unique in terms of
Yeah.
the specificity at which it feels like you selected those partners. It was very strategic from what I
Yeah.
understand. Is that fair to say?
That's 100% accurate.
Yeah.
Full transparency, a very inefficient way to raise capital. I mean, it is a hard way to raise capital, and it took us several years to accomplish. And a lot of conversations across a lot of markets to put those investor partners together. But it's very unique in this space. Not common for a bank to go raise capital that way.
But it really did unlock a pretty significant flywheel of growth by going
Yes.
that route, because not only were you bringing on capital to the balance sheet, but then you were also immediately networked into those communities.
Yeah.
And
Yep. And it's
yeah,
a huge
really
contributor
powerful.
to our growth. I mean, I was fortunate to be part of the part of our second capital raise and part of our third capital raise. And you're exactly right. As we are engaged in discussions about an investor partner coming into our capital raise, alongside that, we are oftentimes talking about capital needs that they have for their middle market or small business. So one you know one thing helped the other, and vice versa. The capital raise helped the business development effort and opportunity to source source opportunities to place capital, to be able to use our balance sheet and put senior debt into the projects that we spoke of. So
Yeah, and it just
it's been a lot
put
of
you.
fun.
It's just fascinating, the success that you've had, and if you had painted that story for a lot of people that are say acquired or have a bank that has a couple hundred million in assets, they
Mhm.
would tell you that is incredibly impossible to do what you did. And you guys sort of, something I kind of like to talk about is like, just remove the obstacles from your mind and consider where the opportunities are. And it feels like you guys just sort of threw the limitations out the window that a lot of people would have
Yeah,
and said, how do we go and do this? And then just actually did the work, which is awesome, man.
yeah,
So
that's right. Yep, there
really,
was,
really
and
incredible.
that's what it comes down to. I mean, it was a lot of work, but we knew that going in. We were committed to it, and it's been just a huge driver for our kind of balance sheet growth.
So getting back to the technology build a little bit, and just to
Mhm.
kind of walk through, and certainly don't want you to share any sort of trade secrets or things that are super proprietary that you're not comfortable with, but anything you are willing to share about sort of step one, building blocks, making sure that you could just really do the operations needed to run the bank,
Mhm.
if I'm stating that correctly. And then part two then was, how do we be innovative, and how do we unlock better experience? How do we unlock strategic advantages from using technology? Would love to just hear a little bit more about what that looked like from
Yeah.
the person responsible for it, which was you.
It's such a great question. The first thing I would comment on is, anybody that's worked inside of a bank knows that it's a team game. Not one
Yeah,
person is inside of any business, bank or otherwise.
true.
It is very much a team game. So, you know, looking back a couple years, that was really our starting point. Is to put the right team in place. So, I start thinking about Carla Dial or Aaron Simpson, Elizabeth Bradley. I mean, those folks are the ones that run risk, ops, audit, compliance. I mean, some really key functions inside of a bank where we're trying to manage risk, not get fined and lose money, bad things.
Right.
So those, and do the best things for our clients first and foremost. That was really our starting point, is to put that A team together, which also took work, but really everything we do. I mean, a lot of people always ask, how'd you do this? And, ultimately it comes down to the team. And I think what's important for us inside of an admittedly smallish organization, we have about 320 associates, you know, running all of this for us. Virtually everything we do, whether it's operational technology or transformational technology, innovation, kind of starts with that core multidisciplinary team, if that's the right word for it.
Yeah, we talk about it as like cross-functional teams, right?
Yes, cross-functional. It's a great word.
You have the different functional areas that you're aligning around the things that you're building, understanding that so many times if the technology and the innovation comes from a vacuum, or it comes from the IT silo, and you don't have the other stakeholders in the business, what happens is the change that you're seeking, the magic that you're hoping to unlock from the technology actually doesn't happen if you don't have the right stakeholders. So it sounds like you were really intentional about that.
Very much so. I mean, we were very intentional about not operating in those silos. So, recognition that each of us, whether it's me running technology and innovation, or Carla running ops, compliance. I mean, everybody's looking through a bit of a different lens. So as we evaluate things, it always starts with that, with that core team of people, to be able to dissect it.
So you got the core team that you had, the right people in the right seats, which is so critical. And then how did you guys select? How did you select and then prioritize which projects that you decided to do, and maybe even give us a few examples of some of those those projects and key initiatives?
Yeah, I think as we think about fintech opportunities, maybe I'll start there. I mean, you have to be in a place where you've got as best a view of the marketplace as possible. So a big part of that was my role and my responsibility, and we have leaned heavily on a handful of fintech fund investments that we've made over the last several years. Hope it's okay to mention names because they're great partners. But
if you're comfortable with it, go for it.
Absolutely. The folks at Jam FinTop, for example, and Bank Tech Ventures, Coda Capital, Gilgamesh. I mean, they are great partners for us, and those partnerships allow us to have a lot of visibility into what's really happening inside the fintech and bank tech space.
Sure.
That helps, we have a good sense for the problems that we're trying to solve for our clients, or operational problems that we're trying to solve internally. But once we got a good grasp of, okay, we're trying to optimize, these three businesses. We're trying to optimize our commercial lending program. We're trying to optimize mortgage. We're trying to optimize treasury. Once you got a good sense for the businesses that are mission critical,
sort of your lines of business, as some organizations refer to them. So you would obviously bucket them, and what are the outcome that we're trying to achieve here in terms of optimization for this particular segment? Okay, got it. That makes total sense.
And you're in the mortgage space. I've spent the majority of my career in the commercial banking space. I think you would agree these are not highly complex businesses. They're pretty straightforward businesses. When you start peeling the onion back, they do get complex. But
the data and the compliance, that gets a little complex. But it's a fairly straightforward what you're trying to accomplish, right?
It is, totally. So knowing those businesses that we're trying to optimize, or knowing the problems that we were trying to solve, plus the visibility that we were able to get into the fintech and bank tech space, really helped us accelerate timelines to be able to solve for certain things. I think maybe if I could just give a great example, a concrete example of one of the things that we did the innovation side beyond LOS, CRM, operational technologies. One of the things that we did on the innovation and transformational side, with a firm actually here in Austin called Z Suite, and we started from a place where we knew we were always going to be challenged by deposit gathering. Our loan growth was so fast because of the opportunities that our investor partners were presenting to us. We knew we were going to be able to grow the asset side of the balance sheet. We needed to stay focused on the liability side of the balance sheet, i.e. deposits. So Z Suite brought us a great opportunity. And if you know them, we're talking about sub-accounting technology. So title companies, law firms, property managers. If you got a property manager that has a pool of $1 million that represents security deposits that someone has given them, there's 200 owners of that $1 million, and that all gets managed on a sub-accounting platform. So we were able to take technology like that from Z Suite, white label it, deliver it to our client base, and realize the benefit of all of those deposits.
Oh, fascinating. So they're getting an easier way to keep that money accounted for, break it down on who exactly owns which amounts inside that pool of cash. So they were getting a benefit, and then you're getting the benefit of the deposit. So that's a great example of using innovation. You guys didn't have to build it from the ground up, but I would argue you actually took core tech, and then the innovation is the way that you executed it in the marketplace. Right? I mean, that's how I think about it. Yeah. Awesome story.
That's exactly
great.
It. And there's
great example.
There's handfuls of examples like that where, so long as you have visibility into what's going on in the market from a product perspective, from a technology product perspective, and the problems that you're trying to solve for your clients or internally, with the right people, with the right teams, you can really bridge that gap efficiently. And I think that's been a big part of our story over the last couple of years.
Yeah, what I'm hearing here, and just to summarize for a moment, it feels like you guys in deciding what you're going to spend time and capital in terms of innovation, you were evaluating speed to market as a key component of that. Is that accurate?
You got it. Yep. Yeah. I mean, that's and it's a hard problem to solve in this business because implementations take so long typically. You can talk about tech all the long as you want, but it takes a long time to implement.
Well, I just can't help but think there has to be a parallel between the growth that you guys have had and the way that you looked at projects, right? So for you're really were focusing on things that you could see an impact in a fairly short timeline versus if you compare that to a lot of innovation projects that happen in the commercial banking and even in the consumer banking side of things. They look at things in such an incredibly long period of time, like a couple of year projects is sort of normal. And you guys looked at it very differently and said, how do we unlock value quickly? And then decided the types of organizations you partnered with who would give you an advantage in terms of speed to market. It looks like that was a critical criteria for you.
It's not a perfect process.
Never is, right? Innovation can be messy.
Yeah, it is. It is messy. You gotta try to streamline and take some chances where you can. But I think we tend to think about things in days and weeks, not months and years. And I always challenge, and admittedly, I mean, the opportunity that we have is inside of a relatively small bank and small organization. So, peers of mine at money center banks or large regional banks are playing a completely different game. And I totally appreciate and respect that. But for us, we have very little interest in building things on our own. I mean, It takes a lot of time, a lot of capital, a lot of risk. And I love this about community banking, but community banks are the sandbox for fintechs,
Yeah,
and it's
that's
such a
great.
cool dynamic. They really the fintech community, pretty symbiotic with the banks. The banks need the fintechs, and conversely, the fintechs need the banks. But
Yeah.
for community banks, especially like us that have an innovation culture, we're such a great sandbox to be able to stand up technologies in weeks, bring start generating revenue and ROI, almost instantaneously, versus me going out and staffing up a technical team and trying to build a solution over 2 years.
Yeah.
I'm trying to do it in 2 months and generate revenue quickly.
No, it's really great context and makes total sense to me. So, I want to ask you a little bit about kind of the environment we're in now. But before I do that, I just want to, I guess, ask one more question. Are there any other great examples? I think that's a fantastic example on the innovation side. But any other examples that you feel were fantastic decisions that you made, looking back on some of the fintech partnerships that you put in place that unlocked opportunity?
Yeah, absolutely. I mean, I never want to lose sight of the operational technology that we use. Try to keep those things balanced between transformational stuff. But with respect to examples, on the operational side, a firm called Compliance Systems really helped our ability. From a documentation, you think about the docs that have to get delivered and the disclosures that have to get delivered. You're in the business, you know this as
Oh
well as
yeah,
I do.
it's heavy.
It's a really heavy lift. The docs are oftentimes very static. They don't really match the differences between states or the differences between legal entities, things like that. So compliance systems and an integration, some integrations that we've worked on with them, help us get to a place where we have a much better, we can deliver a much better set of documents that match the state that someone's in or match the type of legal entity with a lot less manual work. And that's
So
a huge deal for us.
yeah, you take the friction out of it, right? I mean, you're
Totally. Yep.
removing friction from the process, which is another
Yep.
great example. One more technology question, and then I want to talk a little bit about the environment. But when we talk about the intersection of the data and all the rich data that you have on the customers that you serve, the businesses, the customers that you serve, and then technology, we talk a lot about and spend a lot of time, and our peers spend a lot of time figuring out how do you unlock value by being able to take action on your data, being able to kind of proactively serve the customer. How have you guys found ways, or have you found ways to sort of bridge that gap between data and analytics and then actually taking action on it? Any comments there?
Well, you talk about a journey. That's a journey that never really ends. I think some really key takeaways for us were starting with use cases. I mean, we can talk all day long about data lakes and structuring data and the right way to put the technology architecture together, but what is it that you are trying to solve? For your client or internally, starting with some use cases. And for us, I think a great example is we want to be able to run our bank at a lower level of FTEs than banks have run at in the past, right? We want to be able to run, if you've heard the term efficiency ratios, which is a really important KPI in this business. We want to be able to run at a much lower efficiency ratio than is kind of normal or standard in this business. So to do that, you got to understand the use case. We're trying to eliminate manual process in every way possible. and being able to structure our data around that outcome is really
Mhm.
helpful for us versus, sort of pie in the sky, data objectives. We're trying to, maybe we're trying to take some bite-sized chunks as
You're
we
you're
think about what
yeah.
we're doing.
So what you're describing to me is you're very focused on specific outcomes that you're trying to accomplish from the
Yeah.
data and from the analytics, and then you're knocking off those slices, which makes really a practical sense. We see the opposite of that in some organizations that invest pretty heavily in big, data projects, analytics projects, lots of software,
Mhm.
lots of technology, lots of architecture work. But then if you go into the business and you talk to relationship managers or loan officers and find out if there's value being created and there's efficiencies happening, they're not,
Yeah.
there's a real disconnect a lot of times, right? If you're boiling the ocean with these projects versus staying focused on outcomes. So
Yeah.
starting to really see why you've accomplished so much. Love your approach. So
It
um,
also comes back
yeah,
to, I mean, another reason why community banks are the sandbox is our, in contrast to money center banks, our data sets are just so much smaller,
yeah,
so much more manageable, and so being able to accomplish objectives is, I hate to use the word, but it's just easier to do when you're talking about a much smaller group of clients or much smaller data sets. You can innovate faster, you can iterate faster. I'm sure it comes across, but I love the community bank space for a lot of reasons. That
yeah,
being one
yeah.
of them.
No, it's true. Your sort of blast radius on what you can impact, and you can
Yeah,
make you can make bets that are you can move quickly on, and you can iterate on those bets, right? And it makes sense, and you're 100% right. Some of the money center banks, they have more complexity. The size of those data sets are so massive. So yeah,
yeah,
that lines up. Let's talk just a little bit before we finish here. Everyone's really navigating this choppy market out there
yeah.
in terms of rising rates, inflation's out of control. Under these conditions, how are you thinking about your strategy? How are you thinking about changing how you're prioritizing or what you're prioritizing in terms of technology? And anything you
Mhm.
want to comment on, just the general landscape in banking would be helpful.
Yeah, of course. I mean, you and I have been around long enough to see a few cycles, whether we choose to
Yeah,
admit it or not. Um, I think going back to the dot-com bust in the early 2000s, financial crisis in '08, '09, and now what we're seeing, kind of on the back end of the pandemic. Um, Inflation is certainly higher than I've ever seen it. We're in a rapidly rising rate environment. Looks like we're looking at another rate increase here in the not too distant future. So, to use your word, it is definitely choppy. Um, one of the interesting things that bankers tend to look at over the years is that inverted yield curve. The
yeah.
yield on the 2 year versus the 10 year is inverted today at by about 45 basis points. So can't read the future, but that has been a pretty good indicator of an upcoming recession, whether we like
It,
it or not. But
it's been pretty consistent that dictates a
yeah,
recession. Yeah.
yeah, for sure.
Are you guys adjusting strategy? Or any sort of major shifts you're doing to anticipate the more of a downturn in the economy? Are you managing risk more tightly? What is what does the cadence look like, or what does the change in strategy look like, if any? Maybe it's just kind of
Yeah,
keep executing, but
yeah. I think for us, I mean, we are all owners, literally,
yeah,
of Encore. We've got a culture of ownership. So our risk culture, for example, has always been very tight. So from that standpoint, continue to execute. we've got the right people in place. We've got the right processes in place to be able to continue to execute well. Admittedly, being more cautious about how we deploy our balance sheet is always a go-to for bankers. Being able to really lean into the needs of our existing clients, evaluate the needs of the new clients that we're onboarding. But I wouldn't suggest to you that we're doing anything different than we've done, other than really evaluating kind of the fixed floating component of our balance sheet, for example.
Sure.
That's a big deal in periods of time like this, but it's just really an execution game at this point for all of us.
Yeah, no, it totally is. What really is so clear to me that from listening to you describe the story, you're an incredible leader. Reputationally, you're known as a great leader in the space. Any nuggets for the audience on your secret sauce to build that world-class team? And you referenced how important the team around you is, and I would argue to say that the quality of your team around you right now in this environment, it matters more than it ever has. But any secrets that you're willing to share from a leadership standpoint?
Take care of your people. I mean, that is so key. I mean, we have all been through a lot over the last couple of years with the pandemic. We're all still trying to figure out how we're going to work going forward. Are we remote? Are we in person? Right. Are we hybrid? What are we? But I think we would both agree that taking care of your people, making sure that you're in tune with their needs, especially in an environment where we are still growing very, very fast. That's first and foremost. But I would also say, I mean, there's going to be opportunities that present themselves even in choppy periods of time. Lean into those opportunities. I think a good example, if I may, in the mortgage business, I mean, we have a great mortgage team. That's a very tough business right now. So leaning into the needs that they have, being able to, identify technologies. We were talking about some earlier, identify technologies that will make that business better and make that, create opportunities for new business in the mortgage space or whatever it may be. There's going to be some really interesting opportunities, I think, that present themselves in the next 6, 12, 18 months.
We agree.
Be prepared to capitalize. Right? Yeah.
Totally agree. In turbulent times and big market cycles, there's equal parts kind of destruction and chaos and equal parts opportunity. And I think you guys are clearly positioning for the opportunity. And so kudos to you and your entire team for all you've accomplished. So really appreciate the time today, Allan. I know you've got a great channel on YouTube. You're active on social media, on LinkedIn. Tell the audience how they can get in touch with you.
Well, thank you very much for that. I happen to love music production and film production, and as a result, launched the Finovator channel on YouTube a couple of months ago, and it's been a lot of fun. But it's gotten a great reception, and it's a lot of fun to be able to collaborate with an audience like that. So check out the Finovator channel on YouTube, and don't forget to subscribe.
Yeah, don't forget to subscribe. It's spelled FINOV8R, Finovator. So
you got it,
Allan. Thanks a million, buddy. We'll definitely enjoy reflecting back on this conversation, and congrats on all your success.
Thank you very much. I appreciate it.
Thanks so much for joining us today. Be sure to subscribe wherever you get your podcasts.